Welcome traders. So we called this one live. This one is made after the fact, but we called the bottom at 540s to 550s, and now it's slowly grinding back up. So back to the video. I expected 540 to 550. I mean, there you go, 540s, 550s. Good morning traders. So today is July 7th and we are bringing you a green day recap. So this is after yesterday's big red day where we lost about $1,900. But today we are bringing in another big day, but this time it's a big green day. So today I traded SILO and VANI. So let's get through the boring part first. Now, initially I traded VANI. I saw this push to about $1.75 and rejected. Now, typically I really like these setups. I would have shorted in the $1.50s, but VANI has a really high flow. I'm not entirely sure. I think it's about 20 million, but let's double check. Finviz, VANI. So yeah, 35 million share flow. So on the stock, I just took a quick scalp. I shorted the $1.30s. I got out $1.31, high $1.20s. Very quick scalp. I realized my mistake. I shouldn't have even traded this. According to my stats, I generally don't do very well on high float stocks. So I took a quick scalp, didn't think too much of it, got in, got out. I think it made like $100. And that was it. I bought more shares, but I didn't want to invest too much into it because it's not my setup. So I made a mistake. I made a little bit of money and I decided not to hold on to it, which in hindsight, I mean, it wouldn't have made much of a difference. I mean, after this flush, I got out in these bottoms anyways. Maybe I would have gotten out with a little bit more, but we're pinching pennies at this point. So now let's go on to the main trade. The main trade today was SILO. It was not good news. You can look at this chart. A lot of these penny stocks, they are always in these massive downtrends, and this one was no exception. So you can see this massive downtrend. We know there are people trapped. We also know that this stock only has about a 1 million float. So although there are people trapped, they're not trapped. There aren't too many backholders. It's only 1 million shares. So if we're going to short into this, what I'm expecting is for this volume candle, or for the volume on the day rather, to stay relatively contained. If it breaks out on volume, if it gets up to like 10, 15, 20 million shares in the pre-market, it's over. I'm not even going to touch it because it's going to get way too choppy. So on the day, the time right now is about 9:41, so 10 minutes after the market opened. It only has about 5 million shares. So we're using chart watchers, but if we look at trade zero, 5.18 million shares. So that's how many shares are on the day. Now I'm going to open back, this is back up. So let's go back to the actual chart. 5 million shares on the day in the pre-market. So that amount of volume is only about 5 times flow rotation. It's still relatively high given the history of the stock, but 5 times for a penny stock of this caliber is nothing. It's when you have this huge volatility, when it moves up from about 650-ish all the way to about 950, you're going to have a lot of churn. You're going to have a lot of people buying and selling shares, a lot of algos. There's a lot of liquidity in these candles. So I saw this big push. I didn't want to think about it because when it's moving that fast, I don't like trading it. I like to trade it on the backside. And when it's moving like this, where's the backside? I don't know where the backside is yet, right? So this is the 1 minute candle. This is the 1 minute chart. And once I saw this huge, big red rejection candle, I knew there was a chance that this was going to roll over again. So my stats, I mean, if you watch my other videos, I repeat the same thing. When a stock makes this massive push so this one pushed from about 650 to about 950, there is a really good chance that when it does roll over, it rolls over below where it started, 650. And you can see right now it's at 584. I didn't hold it until 584. I kind of wish I did, but I don't really regret it. So let me show you the level 2. This is the level 2 right now. You can see it's very, very thin. Like, we're talking about 4-cent spread, 500 shares, 200 shares. If you're gonna cover maybe even like 1,000 or 2,000 shares, you're gonna push the ask. There is just not enough liquidity, and I didn't want to get stuck holding it, especially because I had a big red day yesterday. But I mean, if you technically, if you look at the technicals on the stock right now, it does look very weak, right? But just because it looks weak, it doesn't mean we have to short it, or we can short it, because again, there's no liquidity. This is pure backside. Whoever is shorted in these candles here or these candles here, they're probably holding it. Now, I know there's a very good chance it'll probably drop to about, according to my stats, I think about 550, 540 to 550. But I don't want to, I have to double check. I have a number. I have to go back to check my percentiles. I have to check my stats and see what this thing likes to do. But I mean, regardless, it's not shortable in this area. It's not tradable in this area, rather. And yeah, I mean that was the backside move on this ticker right now. You can see like it's back to 594. It's so thin, you can't really hold it. If I were to cover even like 600 shares, you might get filled between the bid and ask. But if your size is much bigger than what it can actually absorb, it's going to get pushed to $6. You're probably going to have to cover in the $5.90 to $6 range. I mean, I was watching this for quite some time. The only reason why I got out was because there was just no liquidity at most levels. So let's break down what happened. Okay, after this huge rejection, it made a bottom around 650, 660. And that is approximately where it started. Now, I didn't get in because it's a 1 million float. And if you try to short at this bottom, even though this candle looks really good, like you can see on the 1 minute, it's a doji. It looks weak, but context matters. In this area, is not as strong as if it was like a topping tail at the top. So we didn't touch it. It grinds back up 750s, and there's a general rule that if it holds about half its gains, it's still considered relatively strong. So this one's 650 to about 950. $3 move, half is about $1.50, so $8 is roughly the halfway point, and you can see it's holding 750s. So it's very close to the halfway point. We don't really want to touch it in this area, but once you see this huge rejection candle, this huge push and fade, this happened so fast. It was on, I think, about 100,000 shares. 100,000 shares is 10% of the flow, so this is pretty substantial. It happened so fast. It pushed up and came right back down within seconds. I can show you the 10-second chart on TradeZero. I just don't have access to it right now on Chart Watchers. But what you're going to see is that I actually decided to wait. I wanted confirmation that I was actually going to break. So I started shorting it in the 720 and 730s. My average was around 715, 720. I think I shorted on 730s and I added on the breakdown below 7. So 730s, breakdown below 7, you're averaging 720s. It's a mini consolidation level in the pre-market. My risk, I can't risk the top of this candle 825. It's just way too much. I probably was looking, I didn't even think it was going to break 750, 760, but that's probably where you have to set your risk level. Now, the reason why I say this is not because I'm not risking 750 or 760. It's because this one had a really large spread. It was moving really fast and a really large spread. So when that happens, you kind of have to expect that it might just do a quick pop, break your risk level, come right back down, trapping long buyers and taking out short sellers. So when you take this short, you have to be relatively certain, but you also have to keep your risk level a little more, I don't want to say more liberal, but it can't be as tight as setting like a hard like 758 or 751. It has to be a little bit higher or a little bit lower. You have to watch the tape really, because the spread on this one in this area was about 10 cents. So a 10-cent spread is easily going to wipe you out. So anyways, after this huge candle, I shorted, got out on this flush. I think my average was in 620s. I didn't get all of it out in this area. I really wish I did. But after this consolidation, I had to kind of try to get out on the bid, just throw some orders out and hopefully it gets filled. Typically, with these type of stocks, after this big fade, liquidity dries up very fast. You can see from the 1 minute candles after this dropped to about 607, liquidity dried up really, really fast. And you don't want to get stuck on an illiquid stock. So because of that, I had to get out. I'm not sure if I feel FOMO, if I regret it, but I had to get out. So my plan was I was going to get out about half my position. So I had about 2,400 shares total. I got out 1,200 shares in the 620s. I think it was 626 and 628. That's where I got out. Half my size. And I held the remaining 1,200. I really wanted to hold it for the breakdown below 6, but I didn't even want to hold this into the market open. So I started throwing out orders 618, 610, 608, just whatever it filled me at, because I had such small size and I don't want to get stuck in an illiquid move where it just starts grinding all over the place. I just wanted to lock in my profit from yesterday or from today, cover my losses from yesterday, and just walk away. And that's what we did. So you can still see this is the level 2. It's not moving much. It's hovering around 580, 590s. I mean, it's not gonna. I expected 540 to 550. Now that could still happen because it's so thin, but we don't know when it's gonna happen, and I don't want to hold it until the very bottom. Like I can't. I mean, I guess now you can because there's at least 1,400 shares here, but I mean, 620 to 5 is 30 cents. 2,400 shares, $720 roughly. That's still a good chunk of change, but it's not. I'll be honest, I don't like trading stocks above $5. My typical wheelhouse is between $2 and $4 or $5. When it gets up to $5, $6, $7, $8, I don't trade them as frequently. So, I mean, there you go. There's the flush. But I just wasn't very confident in it. I should have held very small size, but you can see like it just whips right back up 566 to 579, like a 13, 12 cent spread. I mean, it's okay. We're not going to look into this. We're just going to make the recap and we're going to walk away. So anyways, that's what happened. That's the stock. I mean, there you go. 540s, 550s. That's kind of what I expected initially. It didn't happen fast enough for me to actually profit from the move. I feel a little bit bummed out, but I don't. But honestly, it's okay. You know, it's back up to 580s. That's just the nature of these really illiquid stocks because there is no more liquidity. It dried up. So you would have to be really fast. And if I got out right now, yeah, better exit, but we're not going to complain. It's FOMO talking. I know we have to do better than that, but it's okay. These are real emotions. I just don't want to. I mean, I'm sure anybody looking at this would feel the same way. If you had 2,400 shares at average exit at 620, you had what, 50 cents? That's $1,200. I only made 23. So 23, 24, I think. So that's roughly another 50%. But at the same time, the question is, would you hold it through this move? And the answer is probably no. I would hold it, but I would not hold it through the entirety of it. I wouldn't hold full position size, right? The longer you hold a stock, the more risk you're taking on. The issue is, if you're holding on to a very illiquid stock, you're taking on even more and more risk. Now, especially if you had a big red day yesterday, your only thought is not only to recoup, but also to just stay green. We had a big green day, which covered yesterday's loss, and we made some extra money on top of that. So, I mean, it's okay. I told myself at like 9:15, my initial plan was to cover about 3/4 of my shares in the 610 to 620 range, which I did, and I only had 600 shares left. I misclicked an order and I said, this size I want to cover and see if it breaks down to the 540, 550 level. Now, Would I have held it that long? I probably wouldn't. I probably would have gotten the 580s. But regardless, now we're talking about 600 shares, difference of 30, 40 cents. It's not as substantial as before. I'm just trying to justify this to myself. It is my trading journal. I'm probably going to watch it at some point and realize I should have held it or I should not have held it. But that's the nature of stocks. We don't know where it's going to go. We make predictions. We know approximately where based on our stats, but we cannot feel FOMO, especially having a big green day. So let's go look at the actual trades. Yeah, hit a low 543, like I said earlier, 540, 550. I called it before it happened, really. But if we look at trade aggregate, we averaged 715 and we exited at 619 and about 620. So we made about $1 a move, almost $1. That's nothing to be ashamed of. It's actually a really good move. And yeah, I mean, I'm feeling a little mixed right now because seeing it drop. We knew it was going to drop. We called it, but it's very different knowing and expecting what the stock is going to do versus seeing it happen. And right now I'm just kind of rambling, but it's important to understand that this move was never mine to begin with. It was never mine to begin with. Because if I was unwilling to hold on to that much risk to 540, 550 where I thought it was going to go, then there is no reason why you should expect to keep that profit. So I guess that's what it is. I mean, it's back up to 592. And I'm not even making this up. You can see the spread. This is like a 30-cent spread. I knew this was going to happen. That's why I had to exit. I knew the spread was going to widen. And I knew it was going to happen in one of two ways. It was going to pop down here. But because there was so much volume today, about 5 times float rotation in the pre-market, I knew it was going to pop down here. But it was not going to stay there. If it wanted to stay in the 540s, it's going to have to get to 510, 520s and then slowly grind up and hold. But that was only one scenario. The other scenario, which I've seen way too often, was it slowly grinds up. So spread widens, you get 15, 20, 30 cent spread, and it slowly grinds up 650, 660, 670. And I weighed the two scenarios and I said, I can't afford to take that much risk today. We need to recover from yesterday first. This is my biggest green day in 2 months. So I took a 2-month break. So June, July, I guess a month and a half really. But this is my biggest green day. So we don't want to fumble this. We don't want to bungle this up. We just want to lock it in and walk away. We can come back tomorrow with a fresh slate, knowing that we're green on the week. We're still green on the month. We're still keeping a really good win rate, and we can recover from this. We can recover from yesterday's loss, and we're going to do better. That's the mindset that I had going in. I took a risk. It paid off. We're going to lock it in, and that's it. I'm not going to start rationalizing that I should have held it. Normally, I would have, but only if I had a bigger account. So I'm starting with a small account. I think the right thing to do. With a small account, you always have to lock in the profits. And then when you're up $1, you're up $1. It's huge. It's a big amount. It's not going to be, 2,400 shares. This is pretty much my max size, really. 2,400 shares, $6, $7. We're talking about over like $17,000 in buying power. So I don't have that much in my account, but it is buying power. So the broker does give you some leverage. So anyways, that's my recap. We shorted in the 7s. So if you look at the 5-minute candle, this candle right here, we shorted on the 730s. So I gotta find it at the top of this candle, really. 730s. And we shorted at the breakdown below 7. Average 7, I guess it says 716. And we covered into the flush, 620s. And we cover a little bit on these dips. And I think my best exit, if we can find it, $6.11. I think it was like $6.08, $6.11. At that point, you can kind of see I'm just throwing out small orders. It's not going to make a huge difference on my P&L, but I really was unsure which was going to go, and I just wanted to get out. So anyways, before I continue rambling, that's my daily recap. We are green, 2 out of 2, VANI, SILO. I guess I should probably mention why I shorted this one. I guess I forgot to do it in the earlier video, or earlier in the video. So SILO, it gapped up because it had some really irrelevant news. It was something along the lines of it finally got accepted into NVIDIA developer program. So any creator can join. It's not a partnership. It's not a strategic alliance or any collaboration of any sort. They just got accepted. That's it. They put an application. They got accepted. A few months ago, I think it was June 3rd, actually, last month, they actually did a reverse split. That's why their float got down to 1 million shares. But they did a reverse split. They're in a massive downtrend. And they gapped up today on really, honestly, a whole lot of nothing. So this was just driven by momentum, hype, but realistically, it's not anything substantial. And that's why it faded just as fast. So that was my thesis. I knew it was a whole lot of nothing, but I also understand that it was also a very low float. So because it's a low float, you need to let it trap some people, take out some people, trap the momentum traders, squeeze out the short sellers. It needs to go through a period of chop before it can finally fade. And that's what happened. So that's it. That's the daily recap. Hope you guys enjoyed the video. And stay tuned, and I'll see you guys in the next one. Thank you for watching.